sources of income. Section 861 was about income from sources within the United States, and Section 861B was about taxable income from sources within the United States. The trail to 861B was rather obvious, but with the title of Part 1 changed, the average U.S. citizen was likely to conclude that he shouldn't be looking there, since the new title, read one way, implied that it was only about foreign income. Interestingly, the United States Code Service printing of the code, which more faithfully adheres to the underlying law, the statutes at large, still has the title of Part 1 appearing as Determination of Sources of Income. So the correct title is somewhat debatable, but ultimately irrelevant since such titles do not carry any legal weight. After 1954, the sections defining gross income no longer told the whole truth, but simply defined the term to mean all income from whatever source derived, while the regulations under Section 861 began to say that 861 and following and related regulations determine the sources of income for purposes of the income tax. In essence, the truth had been relocated, so that Section 61 itself and its regulations no longer contained even a hint about the limited nature of the tax. And while the current regulations under Section 861 do contain the truth, they further confuse the issue by using the term source to mean geographical origin in some places and to mean specific activities or types of commerce in other places. Section 861 and following give the general source rules concerning income from within and without the United States, but those general rules only show income to be taxable when derived from specific sources, and in that usage the word source means certain activities or types of commerce. This adds confusion and makes it even more likely that most Americans would ignore these sections entirely, thinking that only someone who had a question about the geographical origin of his income needed to refer to those sections, being unaware that the word source might mean something else. This simple summary cuts through the confusion. Section 861B and the related regulations in Section 1.861-8 are the sections to use for determining one's taxable income from sources within the United States. And as decades of statutes and regulations prove beyond any doubt, those sections do not show the income of most Americans to be taxable. The truth is still there to be found, although one must now unravel a tangled maze to find it. Looking at it objectively, it is difficult to explain why this complicated and convoluted web of legalese exists at all, if not to hide the truth. All the evidence points to an intent to deceive. Given what we now know about the statutes and regulations, past and present, we will consider a few sample transactions and determine if the income from those transactions is subject to the federal income tax. In our first scenario, a Canadian citizen, a non-resident alien with respect to the U.S., doing business within the United States, has some money in an American bank, and that bank pays interest to him. Section 61 of the Code generally defines gross income as all income from whatever source derived, including interest. So interest is the item of income. Next, we look at Section 861 and following and the regulations thereunder, which determine the sources of income for purposes of the income tax. The general terms of Section 861 seem to say that this income shall be treated as income from sources within the United States, but the general terms of Section 861 are for determining taxable income from specific sources. Looking at the section of regulations for determining taxable income from sources within the United States, we see that it only shows income to be taxable when it derives from one of the specific sources or activities which are listed here. The list includes non-resident aliens doing business within the United States. This activity is described in Section 871b1 of the statutes, a so-called operative section. Subchapter N of the Code is where Congress has designated which activities are subject to tax based on income from sources within or without the United States. Section 871 clearly confirms that a non-resident alien engaged in trade or business within the United States shall be taxable under Section 1, which imposes the income tax on individuals. The statutes and regulations confirm that a taxable item was received, in this case interest, and that it derived from a taxable activity or source, in this case a non-resident alien doing business within the United States. Just to double check it, we will approach it another way. The regulations say that the items of income listed in Section 61, including interest, make up classes of gross income, which may include income which is excluded for federal income tax purposes. We are directed here to find out what income is exempt, and in the list of non-exempt income, income which is subject to the tax, we see included effectively connected income of foreign taxpayers, meaning income related to foreigners doing business within the states. To confirm it one step further, we review the older regulations defining gross income, and they mention the domestic income of non-resident aliens. The predecessor statute to Section 861 confirms everything we have found for this scenario. In the case of a non-resident alien, interest from within the United States legally constitutes income from sources within the United States, and after allowable deductions, the remainder shall be included in full as taxable income. Under the Constitution, Congress has jurisdiction over commerce with foreign nations, which would include this transaction. The Constitution, the statutes, and the regulations all agree this transaction is taxable. Our second scenario involves Andy Green's cousin, Susie, who is also a United States citizen, but she resides in Canada, where she works for a Canadian corporation which pays her for her services. Looking at the list in Section 61, we see that compensation for services is a taxable item. Looking at Section 862, we see that compensation for services performed outside of the United States, such as is the case here, is to be treated as income from sources without the United States. But then we look to the statutes of Subchapter N to see if this particular activity is described. In Section 911, we find that Susie, as a United States citizen living abroad, is entitled to a large exemption, but that after that her foreign-earned income is taxable. Again, we will approach it another way. The regulations say that the items of income listed in Section 61, including compensation for services, make up classes of gross income, which may include exempt or excluded income. Again, we are directed here to find out what income is exempt, and we see that the foreign-earned income of U.S. citizens, as defined in Section 911, is not exempt from taxation. If we review the older regulations defining gross income, we see that income of U.S. citizens from foreign commerce must be included in their gross income. As we saw previously, the Supreme Court ruled that because Congress has the general power to lay and collect taxes, and the power to regulate commerce with foreign nations, they therefore undoubtedly have the power to tax income which Americans receive from foreign commerce. This transaction is taxable. It includes a taxable item, compensation for services, derived from a taxable activity or source, a U.S. citizen living and working abroad. While IRS publications and forms carry no legal weight, even they sometimes make some interesting admissions. The instruction booklet for the Form 1040, for example, when discussing the reporting of income on the return, shows that citizens are required to report items of income received from foreign sources. The booklet then describes on which